Happy Tuesday, everybody. Welcome back into Mining Stock Daily, jumping back into the gold market here. A little pullback here in the price of gold, but we're going to talk about probably top news this week here, actually, from yesterday. Agnico Eagle taking a strategic investment into Radisson Mining with a $57 million Canadian investment, about 10% of the company. So we're going to welcome our friends from Radisson Mining, CEO Matt Manson, back onto the podcast. So Matt, congratulations on this. All in all, a good day's work yesterday. Your stock was up 25%.
Yeah, no, it's a very good deal, and we were very happy that the market received it so well and understood what it was about. So, terrific major milestone step for us.
Yeah, absolutely. So maybe let's jump into it. Let's start with how this actually came together, Matt. When did those conversations with Agnico Eagle become serious, and what was that original discussion about financing an underground program, or did that idea develop through their own due diligence at O'Brien?
Well, everybody in our business, talks to everybody on a regular basis, and obviously that's very true, especially in Quebec and in the Abitibi. And our project just off the highway in between Rwanda and Val-d'Or is right beside other people's mines. One of which is Agnico Eagle with the LaRonde mine. We're literally 3 kilometers over the back fence from them. So obviously there's been a dialogue for a long while. I think the logical next step for our project is to go underground. We're having great success drilling from surface. We're going deep, and that drill program is going to continue on. 140,000 meters, 8 rigs. We're gonna keep on doing that, but this actually allows us to establish a development schedule for the project, and we're going to the $57 million investment supports a pretty comprehensive underground program, including a ramp, all the associated surface and underground infrastructure, a lot of validation work with the ramp, geological continuity, ground conditions, mining methodology. We're going to be doing drives through mineralized zones. So in the course of our discussion with Agnico, it became clear that the sweet spot here was to for Agnico to come on board with an investment, support that schedule-based work, because it's important to get this ramp in, and all the while our drilling continues and the project is getting bigger.
Matt, Agnico obviously knows the Abitibi exceptionally well, but what did their technical due diligence look like in respects to O'Brien? And do you believe ultimately what gave them that high enough conviction to write that big check?
I can't speak for Agnico. We're being very careful in all of our interviews not to try and speak for Agnico. They've got their own business, their own objectives. And what I would say is that Agnico is an exceptionally professional company, and anybody who's dealt with them understands that. And I have a personal history with Agnico. I was in their shop between about 2004 2006, running a diamond subsidiary company that they had at the time, which was one of the predecessor companies for Stornoway Diamonds. So I know a lot of the individuals there very well. All the senior Agnico people were cross-appointed down into my little sub. And at that time, Agnico was a one-mine company, and that mine was LaRonde in the Abitibi, the mine that's over the back fence of the O'Brien project. So there's a lot of deep familiarity here all round with people and assets and the histories of things. And so, absolutely, a company like Agnico does a lot of deep dive technical work, and they're well known for that. But at a more general level as well, there's a lot of personal familiarity with all of this, and that creates a good sense of comfort, I think, for an investment of this size. And this is a pretty significantly sized investment, even for Agnico Eagle. I mean, $57 million is not a toe in the water. That's a strong statement of validation of Radisson and the O'Brien project.
Yeah, I absolutely agree with you. I think not only has an Agnico Eagle arguably become probably one of the best gold mining companies in the world as of recent years, but also have maybe become on the other side of their business some of the best strategic investors as far as major producers coming in, allocating capital towards
Yeah.
development and exploration type. And so that does come with a premium by the market, and the market does appreciate it. And we saw that in the returns in yesterday's market, as I mentioned, up 25%. But the makeup of this financing here, Matt, did come with a premium both from its previous close and that 20-day VWAP. I'm just kind of curious if I can step into what those negotiations were like on your end. And obviously, you're wanting the best premium you can get for your shareholders, for the company. Agnico comes in wanting the best deal that they can get at the lowest price. Can you kind of just give us a sense of what that negotiation was? Was this kind of maybe something, is there a structure to these deals now that everybody should live by when a major comes in and provides a premium to a strategic investment? Or is this something that really is kind of hardline negotiations in the boardroom?
I think every situation is a little bit different. And again, I'm not going to speak for Agnico, but from our perspective, um, we took the view that we were selling 15% of the company, right? There's a
Mhm.
10.45% ownership in common shares out the gate, and then there's a half warrant here. That's quite typical in Agnico portfolio investments like this. That gives them a line of sight up to about 14.9%. So we took the view that we were selling 15% of the business. And so what number are we comfortable at, right?
Mhm.
We're very sensitive to the fact that we raised capital in the market as recently as May, and that was that was a charity flow through deal where the subscribers at the back end of that, the institutional buyers on the street who were buying the common shares, are paying $1, right? So
Mhm.
this is an up round from that, coming quite soon after that deal as well. So we didn't want anybody who'd invested in that deal to feel as though somebody else was getting, was getting a better deal. And that, this has been a choppy market over the last 3 months, as we all know, right? And
Yeah.
so we were, all of us have gone through a bit of a roller coaster ride in the last 3 months with our share prices. So I think what we announced on Monday morning has landed very well. I think it's landed very well for all parties. It is an up round from May. I think, in my opinion, Agnico are getting very, very, very good value here, and I think our shareholders are getting very good value. And most importantly, it sets us up now to do some really important work, which is going to, I think I said in the press release quote, unlock the full value of the project. And that is, we've got strong treasury to drill as broadly and as aggressively as we think we can. 8 rigs currently turning. It's a big drill program. And we've also now got a very healthy treasury to start this important schedule critical and mining critical piece of exploration infrastructure, this underground decline.
Mhm.
And that double-barreled approach here is what's going to drive future value in the company.
Yeah, you and I have chatted about that in past conversations here this year, Matt, about the potential of going underground. This certainly unlocks that opportunity to move forward with that. And so maybe let's focus a little bit on the technicalities of that underground access. And what do you feel? And obviously, I think I kind of know the answer, but I feel obligated to ask. But what can an underground exploration ramp tell you about the deposit that surface drilling for another 100,000 meters of just wouldn't be able to do?
So the most important thing in any high-grade narrow vein deposit like O'Brien is continuity of mineralization. So that drives everything. So it drives the amount of infill delineation drilling you have to do to get a mineral reserve and to do stope design. It drives how you design stopes. It drives how much underground mine development you budget. It creates the expectations for production rate and gold production from the project, right? So it is the
Mhm.
most important technical criteria in this type of deposit. Now we're starting with a running start because we've got the old mine right beside us and all of the data from the old mine. right? And we've even trenched some of these mineralized zones at surface. So we've got a really good sense of the continuity of mineralization and the continuity of grade. But that is the number one thing that you're looking for. The second thing you're looking for is ground conditions, right? This
Right.
is probably going to be long hole stoping. And so what minimum widths are you dealing with? What sort of dilution are you going to get in the hanging wall and the footwall? That again talks to stope design, stope productivity, numbers of stopes, the amount of underground mine development, and productivity expectations. So those are the two big ones from a technical point of view that you are doing with an underground decline. And thereafter,
Mhm.
once we've actually looked at continuity mineralization, once we've looked at geotechnical ground conditions, we're then thinking about mining methodologies. What mining methodologies are most productive and most advantageous given these situations. And then, of course, you can set up underground drilling platforms. If you're doing detailed delineation drilling, if you're 300 meters below the surface, which is probably where this ramp's going to end up, then that's a lot more practical and a better situation for underground drilling. So all of those things kind of go into that program. As I said, we're starting with this. What I'll say also, Trevor. We're actually not calling this a bulk sample, right? We didn't say in the
Mm-hmm.
press release this was a bulk sample because we feel we've got a very good handle on the metallurgical characteristics of this deposit. We're not going to go in and trial mine a stope here. We are going to be recovering mineralized material because we're going to be driving through vein zones. We don't have a reserve, so I'm not allowed to say ore. I call it mineralized material. So we're going to be driving through vein zones that have mineralized material and bringing this to the surface, and it'll get processed and there'll be a gold recovery. But that's not the purpose of this. It's not a bulk sample per se. It's an advanced underground exploration program. Let's get underground. Let's get to grips with the mineralization and the mining conditions and get that well understood before, we're putting the pin in the wall on how this is going to be mined. And there's lots of deposits out there that have kind of skipped some of these steps, if I can say, in the past, and kind of run into problems. The focus has been on, well, let's build the mill and let's get that started. And we know what we're doing. We just get started with the mining and chuck some ore into the mill and off we go. And that skipping process, I think, causes problems sometimes. In our case, it's going to be a big focus on the mining, setting of the mineralization, continuity, geotechnical ground conditions, getting all that squared away as early as we possibly can.
Okay. So with all those inputs need to be accounted for, it seems like you have a pretty good idea of location and design for this ramp. Is this something you guys have already kind of figured out where it's going to start and where it's going to end up?
Yeah, I mean, what we set up in Radisson, which I'm very proud of, is the capacity to do live iterative work all the time as the drilling's progressing. So Dave Ross, our VP Exploration, has a live geological model, and we know every drill hole updates it, and we know all the time exactly where we are with the model and the numbers of our project, right? So
Mm-hmm.
um, in-house, and that's an important exploration capacity and tool. At the same time, we've got in-house mining engineering capacity that is doing live iterative mine design flowing from that live geological model. So we've got a full mining model with all the bells and whistles that is iteratively changing as our model grows. So having built, and so we know at any moment kind of where we are in how this project's going, and that's really good. And so along with that, yeah, we have already done a lot of preliminary design work on where the portal would be, where an underground ramp would go, what ore zones, mineralized material zones are we targeting, um, and what kind of costs and schedule are we looking at? And that was important to know because if we're then going out and doing a financing with the likes of Agnico Eagle to support that work, we've got to know that the numbers and the dates kind of work for us, right? So
Yeah.
so that works in good shape. And we didn't just wake up one morning and decide we're going to do an underground exploration program. There's quite a lot of work that supports this direction. It's not always something we're talking about publicly out there, right? We tend to be like many other companies. We're out there talking about our drill results and the growth, but there's a lot of professional work going on in the background. And that'll support then the permitting that has to happen. I will say also, Trevor, that this company was already permitted for this type of program. Back in 2018, the company
Mm,
went out and did a full permitting exercise and got the permit on an underground advanced exploration program. Didn't pull the trigger on it. It wasn't the right time. The permit was extended, I think, once, and then it was let go because the company just wasn't at the stage where that was something worth doing. Now's the time. So we've got some. We've already got. We've got the water treatment plant already designed. We've got a lot of design work that's coming off the shelf here, and there's a track record with the ministry in Quebec, with the permitting, with the regulators, on a successful permit application to do this type of work. So that again all
okay.
de-risks this whole sort of exercise.
All right. So if the company originally let that permit lapse, do you go back to square one to get this re-administered permit, or does it make it is it a lot easier than that because it already once has been
I think
provided?
we will go back. It's easier to go back to square one and just
Okay.
come up with, there'll be a new design, and a new set of criteria. Any work like this also has to come with a reclamation plan that comes with the permit, so that has to be redefined as well. So
Yeah.
we'll just do it again. But the message is that you know the concept of doing an advanced underground exploration program of this project has already been successfully permitted and
Yeah.
approved at the regulatory levels. So we're we're
Okay.
we're we're not really losing sleep over that aspect of things. We'll do it all
Okay.
correctly and but as it should be done. But it's again it's getting a confidence to do a deal with Agnico Eagle to do this type of work
Yeah.
because we have that track record.
Yeah. All right. Absolutely. All right. I do want to kind of go back. This news hit, and you're kind of in the middle of this 140,000 meter surface drill program here. That's been funded through your current treasury. Does that at all change or evolve because of Agnico's strategic investment, or is it just kind of head down, keep going with that surface program while you're advancing the underground access?
No change. No
Okay.
change. There's 8 rigs. The 140,000 meters is what's scheduled to go until the middle of 27. It will probably continue after that, and it's all step out. We're not trying to backtrack and infill. We're not focused on the quality of a resource right now. We're just focused on the quantity. So it's getting a lot of inferred resources, but we're hitting with about 80% success rate. We have this table in all of our drill results press releases that show you the hits, and a hits
Mm,
is a intercept 3 grams per ton or better in core length, because we know that's going to true up to be something above 2 grams per ton, which is our cutoff for the resource. So we're hitting about 80% of the time. We're getting good continuity. We did an exploration webinar a few weeks ago. We were trying to sort of demonstrate the continuity we're seeing in the mineralization, and Dave Ross was showing you the live leapfrog model. So very confident about that, and we're going as deep as we possibly can. Right?
yeah.
We're not worried about depth, and because we think because of the infrastructure around us, the mining infrastructure around us, we feel that everything we find down to the deepest we can drill from surface has value, has potential, has prospects for future mineral development. They're payable ounces
Hmm.
given what's around us. So we're going as deep as we possibly can, and 2.3 million ounces was the number in our resource update back in March. And we've guided to an exploration target that, if we're successful, would see that resource be between 3 and 4 million ounces to 2 kilometers depth. And we haven't walked away from that guidance at all. Quite the opposite. We're getting more and more confident about that, and we're kind of seeing opportunity over the higher end of these ranges, right? So, and
Right.
that's 2 kilometers depth. So we're full steam ahead on that type of drilling. It's successful, and we're pushing forward in that as before.
Yeah. Okay. My last question for you, Matt, and I'm hoping you can just maybe editorialize here on where we are within the general gold market, and specifically on M&A within this cycle. We seen these producers, these gold producers, are just raking in cash hand over fist because of the price of gold. Their allocation, what they're doing with those earnings, is not similar. I mean, it's not what they did in 2011, overspending on early stage exploration, but we are seeing some mergers. We're seeing a little bit more of these high swing strategic investments. Obviously, Radisson being one of them. Like, you've seen a few cycles here in the gold in gold markets here, Matt. Just maybe this being a bellwether, or it's just another indication, an anecdotal indication. What does this say about the gold market? What are the major producers doing with this capital now that they have probably the best environment for producing gold that we've ever had?
Every year we all schlep down to Denver for the shows at the end of September, and we do Beaver Creek, and then the Denver Gold Show happens the week after. And at the Denver Gold Show, you get the bigger buy-side guys and the bigger precious metals producers meeting up, and there's always some theme that comes out of Denver, right? And it is the marching orders that the buy-side guys are giving, the expectations that they're creating of the bigger producers in the precious metals business as to what they want to see. And you hear what the buzz is coming out of Denver. And I have seen many cycles, and I remember cycles when it was all about balance sheet repair. You guys have got too much debt, fix your balance sheets. And I remember cycles when it was all about margins. You guys haven't made any money for us for years, right? We want to see, stop doing these big mega projects. We want to see margin, right? We want to see grade. So every year is a little bit different. I think this, we'll see what this year's going to be. But one of the realities of what's happened over the last, say, 12 months is the gold price has driven the cash, the treasuries, and the cash balances on these companies to levels that they've never seen before, right? And I don't think there's any gold mining company that's struggling right now out there in terms of their treasury, right? And it's not a very good time if you're a lender to the precious metals business, because nobody needs to go out and get debt other than a corporate revolver, maybe. So you've got to imagine that then the expectation this year at Denver is going to be, where's the growth coming from? And share buybacks and dividends are great, but company X over here has got a better pipeline than you. So what are you going to do about it? So let's see what happens at Denver. Denver will tell us what the theme's going to be, because I do think it's buy-side driven very often, right? And let's see what the buy-side guys are telling the larger cap CEOs this year. I think it's going to be something around where's the growth and where's the pipeline, and shows execution on a healthy pipeline.
All right. Well, maybe that's we'll have a debrief conversation, you and me, in our next one here, Matt, following that, because that's just almost about a month away here, so, and we'll be on the docket for another update, probably come late September, early October. So that'd be a good conversation, a debrief of what you learned from both Beaver Creek and Denver Gold. Let's leave it at that. So, all right. Congratulations, my friend. Radisson Mining trades on the Venture Exchange with RDS and on the OTCQX with RMRDF. Matt, always appreciate the conversation. Always a great time. Thanks for coming on.
Thanks for having me.
The information presented should not be considered investment advice. Mining Stock Daily and its affiliates are not responsible for any loss arising from any investment decision in connection with the material presented herein. Please do your own research or speak with a licensed financial representative before making any investment decisions.